The Consumer Bankers Association is pleased to welcome you to today's webinar, Building Security and Trust in Mobile Banking as Adoption Increases by Zenki. My name is Victoria, and it is my pleasure to facilitate today's event. Thank you for joining. Please note, we are recording and all participant lines are muted. If you have any trouble, please email conferences@consumerbankers.com or send a message in the Q&A box. This presentation will last up to 60 minutes and will include question and answer opportunities at the end. You may submit a question at any time by entering the questions into the Q&A box on the bottom of your screen. As a reminder, the views expressed in this webinar are those of the presenters and do not represent the views of CBA or its members. It is now my pleasure to introduce our speaker, Alex Schlager, Chief Executive Officer at Zenki. Welcome, Alex.
Hey, thank you, Victoria, and welcome everyone to today's webinar. Good afternoon. Now, as the title suggests, building security and trust in mobile banking, and as adoption increases, we're not necessarily suggesting that mobile banking is untrustworthy or insecure, but we'll share a couple of stats and development, and the title hints at it in increasing adoption that suggests that more needs to be done. So we're gonna, briefly touch on the mobile banking landscape, what is happening from an attack surface perspective, the most common types of vulnerabilities, how to introduce another layer of security, and we give an example with Zenki, and then, talk a bit about open ecosystem with trusted providers. Now, there's an estimated 170 million mobile banking users in the United States today. 80% of users state mobile banking is their preferred way to access their financial accounts. So I'm sure these stats are not necessarily surprising, maybe even obvious. But as we look at the details of who is using mobile banking and how are users using it, we will see a couple of differences, and I'll share two examples from my own family. So from a mobile banking usage, you see, the younger generation, the more digital native people are, and therefore, again, not surprising, we see significantly higher adoption and usage rates, meaning with millennials, 97%, 91% with Generation X, and then 79% with baby boomers, which is actually, quite still remarkable in sense of adoption. Now, the two private example I'll share with you is my older son. He's 14. He's a digital native. He operates and uses digital assets very differently than, let's say, my mother-in-law, who is on the baby boomer side. So both of them use mobile banking, but the way they use it and the way they can cope with unexpected deviation from the expected usage path is obviously very different. There might be some, factor might be age, but a big factor is, as I mentioned before, whether somebody has been born digitally native into a specific environment. My mother-in-law actually changed the bank because she was very frustrated with the mobile banking app. So it's like, and we'll get to that topic a bit later in sense of how critical and sensitive user experience is with mobile banking or mobile apps in general. You sometimes might hear, UX, user experience professionals talk about cognitive effort, meaning how much cognitive effort does a user have to put in the usage of the app in order to create the outcome that they're intent to do. And that also very differs, obviously, in sense of, from generation to generation and what people expect from their mobile app experience. The reason I'm emphasizing so much the experience, and you might ask, what has this to do with security? There is a significant trade-off between convenience, experience, and security. And that is very, very present in the banking and finance industry. So we'll get to that, but the reason why experience is an important topic here, and being aware of how users use mobile apps, as I said, has an impact on our ability to secure these assets. Now, again, not surprising, what do people expect from mobile banking? It should be fast, it should be convenient, and it should be accessible anywhere. Now, if we go back in time, convenient, in banking meant brick and mortar wise, that there is a high density of branches that you could, with little effort of travel get to your bank. Fast means is the bank staffed properly enough so that you don't have to wait for 20 minutes in line, and accessible anywhere. Obviously the first use cases that we saw here was mobile, was phone-based banking, which already back then introduced some security challenges, but of course they were in no comparison to what we're seeing today, as fast, convenient, and accessible anywhere all relates nowadays to the digital experience, whether it is on a website or whether it is on a mobile app. Now, banks own the risk, whether they use their own in-house proprietary app or they use a third-party application. And according to mobile banking customers, and again, no surprise here, security was the most in-demand mobile banking feature. Again, not surprising because the first instinctive reaction to banking, to money, is of course security. But the big trade-off here is, as I mentioned before, is experience. And that is a general challenge we have in cybersecurity beyond mobile banking, whether it's enterprise security, whether it is security in healthcare. It almost doesn't matter which industry you look at. There's a trade-off between experience, ease of use, friction, and the degree of security. Or in other words, from a pure technology perspective, we have much more tools at our hands today than we actually applying to the consumer space. Because the consumer space, and because of that term I mentioned before, cognitive effort, there's only so much we can expect of your average user, spanning across all different generations with different preferences and technological abilities. The experience is really one of the main competitive factors for banks today. So, when I talk to especially the large banks, I would hear on a repeated basis that, of course, security is paramount and important, but user experience is where they compete. As many people, and I mentioned my oldest son, he's never been in a bank, in a physical brick and mortar office, right? He signed up for his account, he has a mobile banking app, and this is basically the bank's face to him as a consumer. So user experience, ease of use, reduction of friction is really a big competitive aspect for banks. And they obviously are trying to set the bar very high here. And then we dial in security as much as possible to the point where we just don't break the experience or diminish the experience, because that would be hurtful to the competitive position. So from a financial perspective, think of this. I can look at my damage from cybersecurity related incidents, fraud, versus the potential monetary loss of degrading experience and therefore losing customer and losing business. And that's a very tricky balance for banks to strike the right balance between maximizing security, because not doing so introduces financial cost, reputational damage, might even introduce scrutiny by regulators and legislators. On the other hand, I want to be as most appealing and as easy to use to my consumer, because the mobile app or the mobile experience is now my main storefront, for lack of a better word, to my audience and to my consumers. Now, these are the stats I mentioned earlier when we say, well, of course, banking is secure and trustworthy, but there is still work to be done. So $5.1 billion in losses from, these are global numbers, from account takeovers, unauthorized individual taking over somebody else's account and then, stealing money in simple terms. $2.92 cost to a bank for every dollar of card fraud. And these might be costs related to, security, IT, litigation, insurance, and reputational damage. 300% increase in account takeover fraud. Now, that is not surprising. It is really as simple as follow the money, right? As in business, we often use the term follow the money. The same holds true for cyber criminals. Meaning finding the path of least resistance and the path that gives me the most return proportional to the effort and the risk is what cyber criminals pursue. And we'll talk a bit about that later when we look at the attack types and attack vectors. But the more we move economic monetary value into the digital space, the more we attract the dark side, for lack of a better term, in order to exploit that. So that 300% is not necessarily surprising. If you look at the speed of adoption, and as I said just now, the amount of monetary value that is continuously shifting from the analog world into the digital world. 600% mobile fraud increase, again, not a surprise. I used mobile banking very early, probably 17, 18 years ago. It was, of course, then still browser-based. There was no smartphones, and the browser was my main conduit into mobile banking. But with the explosion of mobile usage, of mobile bandwidth, and in particular mobile phones, usage has significantly shifted to mobile devices, and therefore we see a proportionally respective increase in fraud. 39% fraudulent online transactions from mobile apps. This obviously ties into that mobile fraud. And then 3 out of 5 fraudulent transactions come from mobile browsers. So none of these stats are necessarily surprising. What we do see is that they accelerate and they increase. And again, this is a result of more and more transactions in general, economic transactions, monetary transactions being moved from analog to digital. And then, of course, COVID-19 itself represented an acceleration. And that applies to a lot of areas in cybersecurity, as you can imagine. As people worked from home, as people were more reluctant to go to a brick and mortar office, whether it's banks, healthcare, or particular, receiving social benefits, they were really asking and looking for solutions that would prevent them from going outdoors or going into a specific office. Now, firewalls and antivirus solutions alone are no longer a recommended method for preventing fraud and cyber attacks. Now, that statement is almost a bit dated and is very obvious, and it has been true for a long time. But we use these on purpose just to outline how much effort enterprises in general today have to apply in order to keep the environment secure. The average enterprise today deploys between 7 and 9 different cybersecurity vendors in building out their security stack. So, firewall and antivirus, you will often hear endpoint protection today as a replacement for antivirus, are 2 out of many, many different tools and methodologies companies use today to protect their environments. And I took this from the Verizon Data Breach Investigations Report, also known as the DBIR. Now, if you are interested in this whole subject matter and you want to go much deeper, I really recommend you to download that report. It's free of charge. You can, if you Google Data Breach Investigations Report, you'll find a link. With Verizon, and you can download. It's a publication which runs since 13 years. It's considered the go-to document or the go-to data set in understanding trends in cyber attacks and cyber crime. Now, the left graph shows you patterns over time in incidents. Now, what's a cybersecurity incident? An incident is any activity that threatens the confidentiality, integrity, or availability of data or of information. So confidentiality is simply things you should not see or know. Private PII, private information, for example, industrial sabotage, espionage, they all fall into confidentiality. Integrity is the assurance or trustworthiness that the data someone is looking at has not been altered. So one example you could think of is a hacker reproducing a perfect replica of your login page, of the bank's login page, and only by closely examining the URL would one recognize that this is actually a fake. But in this case, I cannot trust, the integrity is violated for me as an end user. I cannot trust the information that is represented to me. And as I proceed and enter username password, I obviously have been breached in sense of my confidential information. Where integrity is also a huge issue is in IoT, for example, Internet of Things, in particular in industrial IoT, where over the last 10 years, there was a massive shift of converting industrial appliances to support IP, the IP protocol. And now hackers make use of basically displaying wrong values of different measurement entities, gauges, in order to trick companies in believing that all systems are nominal when they are obviously not. If you're interested, do some reading. Stuxnet was a very famous hack of the Iranian nuclear facilities. That was exactly what was happened there, right? The centrifuges were altered, but the integrity was violated by hacking the management consoles and showing nominal values to all engineers. So there was no suspicion that the centrifuges are actually going into overdrive. And the last one, availability, is I launch an attack and I basically make your digital asset unavailable. Denial of service is the most common it's the most common type of attack here. So if you look at that left side, the incidents over time, it does not mean that they were successful. There were attempts. Meaning all of these different categories were attempts of either violating confidentiality, integrity, or availability. And they might have happened at different stages. So another term you often will hear in cybersecurity is the kill chain. That's a term that comes out of the military. I think Lockheed Martin, I believe, has coined the term. And it consists of 7 steps that an attacker would go through, from reconnaissance, weaponization, delivery, exploitation, installation, command and control, and exfiltration. The only thing, so you don't need to know the steps. What I'm saying here is that an incident could mean somebody was caught doing reconnaissance, actively doing reconnaissance in understanding the assets I have, how they're configured. But it could mean that somebody went almost all the way to exfiltration. Not every attack follows these 7 steps. So different types of attacks will go through different steps along this chain. But incidents means the breach was not successful, but somebody attempted that particular attack and has achieved either one or multiple steps along the kill chain. Now, if you look at denial of service here, which is at the very top, meaning there's a large volume of attempted denial of service attacks, but you look at the actual successful attacks, meaning where the kill chain was fully executed and we experience a breach, then denial of service here is at the very bottom. So this means there's a large amount of attempts, but the majority of them do not succeed. And the reason is denial of service are relatively easy to pattern recognize and to avoid if providers have the respective tools in place. But if you look at social engineering, comparatively less attempts in comparison to denial of service. But look at the right graph. By far the most successful in sense of fully executing and successfully breaching the respective target. Now, that is our biggest headache, or the biggest risk nowadays. With the increase of digital adoption and digital usage, social engineering has become the dominant attack vector. And the reason is relatively simple. The reason is the human being is the weakest link. Because we simply cannot compete against the precision, automation, and volume a computer can handle. In other words, what we as a community have learned over the last years is to protect ourselves against a variety of different attacks, whether it's system intrusion, whether it's backdoors, command and control. We have very effective tools at our hands today to stop or prevent these kinds of attacks, which ultimately led hackers to my earlier point, the path of least resistance ultimately is the end user, the human being, the weakest link. Privilege misuse is a great example where PAM, privileged access management, is a relatively young discipline in identity and access management. And it deals with the fact that we have to be very precise in detail in which user has which privileges on which systems. 10 years ago, this was not too big of a concern, and you would see a large amount of individuals have administrator access, or you would see that user permissions and rights have not been fine-tuned on a persistent basis. So we learned this really quickly. There's a lot of new companies that popped up in that space, and as you can see, we have significantly reduced the number of successful breaches when it comes to privilege misuse. So the big concern for us, for the mobile banking industry, the healthcare industry, or any industry that has consumer-facing business where somebody could get a monetary advantage by breaking into these systems, are basically vulnerable for social engineering, and that's, as I said, is our biggest concern nowadays. Now, so the problem, if we look to social engineering and the human being the weakest link, is vulnerable access and weak authentication systems. So if I, as an individual, authenticate myself, and it is easy to imitate or replicate that type of authentication, then obviously, that solution is respectively flawed or, at risk to be a result of a breach. Now, common opportunities for fraudsters are carrier port outs, SIM swapping, and events where users are changing device phone number, a device gets stolen. So what happens there is that, we have this a slide later, is that hackers would use social engineering. If you think about the kill chain, the first stage is reconnaissance, and basically go through the internet and learn everything they can learn about you. Go to your Facebook, your Instagram, and whatever social media you're interacting with, and they're collecting all this information. There is even, I call them sweatshops in some countries where you can buy these services, where you can buy over deep and dark web, basically reconnaissance for a couple of dollars, and basically have people illegally or legally amass all this information for me to illegally use it, call up the carrier, call up the support company, and convince them that I am actually the person calling to perform a SIM swap, a phone change, or any of these activities. Now, that is the reason why SMS and email are coming as a methodology for second factor are coming to an end, because they are inherently insecure. Now, a factor is simply a term we use in authentication and identity proofing that represents a proof point. So a factor would be a password is something that you know. That's one factor. Something that you are might be a biometrical pointer, fingerprint, iris scan, etc. It might be something that you have, a physical security token. And multi-factor simply means the more factors we combine, the higher we push the entry barrier for somebody to break into our account, for example. And two-factor simply means that next to my username password that I enter, for example, for my bank app, the bank requires a second factor, something that you have, in this case, not a physical token, but a one-time passcode, which is delivered via SMS or email. Now, you do not have to be a sophisticated hacker to hack SMS, right? 2 years ago, there was a flaw detected in the SS7, which is a specific telephony protocol, where hackers actually hacked into that protocol and could extract SMS. It is not that sophisticated today. It is literally convincing personnel at carriers or at carrier support companies to perform, for example, a SIM change, meaning once I'm in possession of that SIM card, I will receive that second factor information from the bank. Or if I successfully hack into your email, I'll be able basically to grab that second factor, and I'm basically in your bank account. So there's a lot of work going on in the industry, how to effectively introduce multi-factor authentication, how to make the second factor, which is commonly SMS and email, more effectively, meaning an alternative to that second factor. And at the same time, and here comes the tricky part, not disrupting the existing positive user experience. right? So this is where the circle closes, that on the one hand, we do have all these technologies in theory to make things more secure. But on the other hand, we need to keep this in balance with what we can expect a user to being able to handle. And again, that user is not only the 18-year-old Generation Z, who he or she will have grown up with the technology, but it also, of course, caters to different parts of the population. So when we look at these solutions, a lot of companies, including ourselves, we do a lot of end user testing. So we find samples of the population, cross demography, that basically use our app or use our solution in order to understand how far we can push the security envelope while still grabbing the majority of the population. This slide simply shows what I just mentioned in sense of how a hacker uses a SIM swap attack in order to receive that second factor. And with that, assuming he already has your username and password, breach your account. Now we have a poll question. We have one in this seminar. Would you consider an additional layer of security to protect customer accounts? Now, before you answer, think, because the answer might be obvious. Of course, I would assume an additional layer, but think about what this might mean for your end user, for your consumer and their experience. Could you introduce, or would you introduce another layer, even if this might have an impact on your user experience? So I'll give it a minute here for folks to answer. So, okay, 8 out of 15 so far, with a majority answering yes, they would. Okay, I think we won't get more answers than that. So there's a couple of one person saying no. And again, it is not surprising, because there is a cost to security in sense of user experience. And as I said, there's a big body of work with companies like Zenki and others who participate in this space to understand how we can strike that right balance between increasing security utility or at the same time not being detrimental to user experience. Now, so enhance your KYC, know your customer, right? A common requirement in the financial and banking industry. And this brings us into identity proofing, or also called identity verification, for efficient account holder transactions. Now, this is probably a seminar on its own, so I'll keep this relatively brief, but I'll just give you the most important pointers. The challenge here is with the internet having no geographic boundaries, meaning a user could be anywhere in the world. You don't see the user, you don't have visual affirmation like it was done in the past. How do we create a trustworthy claim to an identity? So in the past, I would walk into the bank, they would see me live, I could show my ID, you could check the watermark, you could see whether the picture matches, and I obviously could not have been geographically anywhere else at that same time as I was in the bank. Now, this obviously has all changed in the digital space. So the real challenge with identity verification is how do I affirm trust that the individual claiming to be that individual is actually an individual? And what is very common today is to basically use an app and upload information onto the app. Your driver's license, you scan it back and front, your passport, your social security number, and so on and so forth. Now, a term you will often hear with identity verification is IAL2, stands for Identity Assurance Level 2. There's 3 levels in short. Level 1 is self-asserted. I'm Alex Schlager, and I trust, or you simply need to trust that I am who I say I am. IL2 is self-assertion with supportive documentation, and we'll get to that in a minute. And IL3 is the same, with the exception that you have to be verified by an individual face to face. So you would go, let's say, into a bank, and the verification of your driver's license, of your passport, and of yourself is done by a trained employee. And that would be IL3. Now, for the purpose of scale and volume, what everybody is obviously looking at is IL2, because we can do this purely in the digital space without the need for an individual to go to a branch, for example. Now, IL2 requires different degrees of evidence, and what the standard, it's called NIST 800-63, basically requests or demands is that you have either one piece of superior evidence, and superior evidence is evidence that is attested by the issuing entity. You have a piece of strong evidence, which is your evidence is verified by a third party. And then there's fair. You have the evidence, but no third party has basically attested as to its authenticity. So in the driver's license example, we scan the front and the back. We look at the barcode in the back. We basically extract the information from the barcode and we compare it with the information on the front. That's the first marker to determine whether it is a fake ID or not, right? So if the barcode itself and the information encoded in there matches the front of the driver's license, that's basically the first step to assure the driver's license is accurate, but is considered a fair piece of evidence. So what needs to happen to convert the driver's license from fair to strong is that information needs to be sent to a third party, DMV, AMBA, for verification. So upon receiving acknowledgement that yes, this is a valid driver's license, you would elevate your piece of evidence from fair to strong. So other examples, as we would need too strong for IL2, would be a passport. Now, the interesting piece with the passport is you do not need to third party verify it, because passports today have a cryptographic chip in the cover that can be read with NFC near field communication. So if you would scan your passport and your app has NFC capabilities to read out the chip on the passport, that, for example, is considered a strong piece of evidence. So you could do the passport and your driver's license that is third party validated and you IL2 compliant. Now, that is a bit of work for the user, right? It is not necessarily convenient because you have to go through the scanning and the passport and the driver's license. I mean, at the end of the day, it will take you probably 10 minutes, but it is an active work to be done by the consumer, which brings us back to cognitive effort, user experience in introduction of friction. The other problem here often encountered is only a third of the US population have a passport. Or as you will see in the healthcare industry, the age requirements have dropped to 13 years of age, meaning healthcare providers who are working or looking at identity verification solutions need them to support individuals from the age 13 and older. So a 13-year-old won't have a driver's license, might not have most likely a passport. So this is why you will see different implementations in the field where, for example, a social security number and the verification by a third party of that number is considered strong evidence. You might have experienced going to the DMV to get a driver's license, renew a driver's license, and there's certain documents they ask you, right? If you go to the DMV homepage, it talks about the 6 points. It's the same principle, just in the digital space. And therefore, a lot of companies will not, enterprises will not demand IL2 compliancy, because to our previous point, it introduces friction and it introduces a potential degradation of the user experience because they have to do all of these things. So a lot of companies will do identity verification, but at a lower level. So a lot of companies would say, if you scan your driver's license and if the barcode matches the front, that's good enough for me, and that's all I'm going to ask from my users. If you go into the government space, when we talk about social benefits or we talk about taxation, there you will see the demand for IL2. So no government entity dealing with social benefits, taxation, or any other topics will accept anything below IL2. But then it's the government, there's no competition. They are not too concerned about user. I mean, they are about user experience, but in no way as the banks are, because it's not a competitive differentiator. So you will see companies really looking at the trade-off between, and again, user experience and how much exposed am I still to fraud by doing just a driver's license without anything else. It will reduce my fraud, but not to zero. But if I put this into proportion to potential customer loss, if I have to introduce more and more requests to the user, then that is basically what banks are looking at. That trade-off between, say, introduce more security, where does it become a challenge in sense of loss due to customer loss or a reduction of customer satisfaction. Now, we added a couple of Zenki slides here, and don't get me wrong, this is not a product pitch, but as this is what we do, it is obviously easiest for us to give you examples of how these things work in the industry today. And as I said, there's a lot of different providers with good technology that do things slightly different. We have chosen a specific path. And I'll use this to illustrate what is happening today and what's possible today. So one thing banks and many other enterprises do is they basically evaluate the risk. So this is in no example is this done in a binary fashion, but scoring is very common here. So what these companies do is they collect information from a variety of sources, and they aggregate this information and they correlate it. And in many cases, they produce a score. Now, the score is relatively straightforward. You are all familiar with the FICO score. The FICO score basically represents the risk of an individual defaulting on his or her obligations. That's all the FICO score says. How likely is it that I will not get my money back as a debtor? So risk scores in cybersecurity basically they do not express the risk of being breached, because nobody can tell you that, but they basically represent the quality of your security posture, right? The better the score, the better your posture, the higher the entry barrier. And in this particular example, as a user performs a transaction, hey, I'm Alex Schlager, here's my driver's license and maybe my social security, verified social security number. There is additional signals we can pull in about Alex that will help us determine the risk, whether that claim that he makes is in fact true or false. So what we use with the carriers in particular are so-called push and pull signals. These are signals we can pull from the radio access network, from the mobile networks, things like SIM swap, call forwarding, account tenure, right? If you have a user using our solution and we see via signal that the account was only open 24 hours ago, right? That's a significant red marker in sense of there's potential fraud there. And there's a couple of other signals. There's in total 8 signals we use. But normally a single vector of signals is normally not enough. They are good. But what companies do, they would enrich them with additional secondary signals and correlate signals or information points into that. Example, you could pull information about me from the deep and dark web. You could say, hey, how many accounts does Alex Schlager have that are known compromised accounts? How many passwords do we think are out there that Alex used in the past that have been compromised? It's not a very strong indicator, but it's a good secondary indicator. So the point being is the majority of companies use scoring here, and they determine a threshold, where if you fall below that threshold with your transaction would be respectively denied. So it's a question of policy for individual companies and the use case. Meaning if the use case that the user is coming in with his or her identity claim has a high impact, wiring $10,000, then companies will have a policy that is probably more strict on the score, like how low risk does the claim have to be, versus a different transaction that might be less impactful. You would accept a slightly lower score, for example. So I won't go through the full slide because this is not a product pitch. What we do is we convert the mobile phone into a security hardware token. So this goes back to different factors being used when users are authenticating and or proving their identity. We're looking at how many factors can we stack, can we combine to basically put the entry barrier as high as possible, right? Any cyber professional who tells you something is 100% hack or breach secure, it is not, right? So I would never make the claim that something is 100% secure. Nothing is. Everything in theory can be hacked or breached. What we're doing at the end of the day is we're maximizing the entry barrier, right? We're making the entry barrier so high that it's very hard for an individual, average hacker to basically breach it. And it would require, a high degree of sophistication, insider knowledge, and so on and so forth to actually overcome that last hurdle. But this is an example of what we do. And again, there's a lot of other companies out there that do different things. Because we represent the three carriers, we have chosen this path. And what we do is we cryptographically bind the user, the individual, with his or her SIM card and the physical phone. So, if you look at the bottom here, that's basically this triangle relationship. So a user that downloads Zenki and activates Zenki is basically cryptographically bound to his or her SIM card and mobile phone. And every transaction that user does is, we verify with the app that relationship is still intact. What this practically means is that we now have another factor, something you have, which is a physical security token, right? So your phone now is a physical security token. Now, the reason we have done this is because we represent the carriers, we have access to the SIM card. And some of you might remember in the past, RSA had these gray token generators, which is a security token. The point here being is if you go into the consumer space, no consumer will ever accept carrying around a separate physical token just to get access to your bank. Now, I lived in the UK 10 years ago. I had a token generator. So when I used online banking, I always had to have this little token generator where I entered the key, and needless to say, I had to replace it 4 times because I lost it and forgot to take it with me, and so on and so forth. So the idea here is everybody has a phone and carries the phone with them, and therefore using that as a security hardware token is one way of not inconvene the end user, but at the same time introducing another factor in order to improve security and that claim to the identity in sense of trustworthiness. The last piece is a bit roadmap, what you can expect happening in the industry, and that is zero trust network access. Now, a big word of caution here. There is certain terms in IT that get a lot of traction and become very attractive, and everybody's using it, although it's not necessarily always under the hood. So zero trust is such an example, right? You won't see almost any homepage of a cybersecurity company today that doesn't use the word zero trust. It does not necessarily mean that it is truly zero trust. So the core principle of zero trust is that there is no implied trust upon two assets, or an asset or individual communicating with each other. And I don't have the time to go into the whole history, which I'd love to, but in short, if you look at the way we were securing environments in the past and how network topologies looked like, you had the perimeter with firewall, and we assume that everything that's inside the perimeter is trustworthy. So there is no need for authentication, authorization, additional security. If you're within the perimeter, everybody can talk to anyone. And we imply trust because it is within the perimeter. Now, the perimeter does not exist anymore in that shape or form. We talk about, the vanishing of the perimeter because everything is hyper fragmented, right? Mobile usage, working from home, 5G with mobile edge compute. So the whole thing basically hyper fragmented, both asset-wise, things are in the cloud, and user-wise, right? Users do not go to the office anymore where they sit behind the firewall. They preferably today work from home. Now, this means that zero trust means that the new notion is there is no more implicit trust because there is no perimeter. So the default notion is don't trust anyone or don't trust anything. In other words, every single transaction requires authentication and requires authorization, whether it is asset to asset, human to asset, or human to human. Now, the challenge of introducing zero trust to the consumer space is that technically the consumer would need to do two things: authenticate, maybe optionally ID proof, and then initiate a zero trust network access tunnel. In other words, zero trust network access, the way it manifests is basically a VPN, an encrypted tunnel, an IPsec tunnel. But for an end consumer to do now two things, and remember that I first have to authenticate, be authorized, and then I trigger the VPN, obviously is a no-go, right? It again goes back to how much can I assume your average consumer being able to do or willing to do, and that obviously is an absolute no-go. So what we did and what you will see other players doing is to basically trigger that tunnel after successful authentication inside the app. So let's say I have my banking app on the phone and I have Zenki. What I want to do is I go to my bank, I say authenticate and optionally identity verify. And now the bank response to the Zenki app is it needs to be encrypted. So the Zenki app would initiate an IPsec tunnel to the bank, and every transaction, every information now going to the bank from the bank app goes through that tunnel. And the moment I close the bank up, the tunnel is torn down. So the encryption keys and everything are temporary, only for that session, and then it's basically terminated. The reason this is important is to defend against man-in-the-middle attacks, intrusion attacks, command and control attacks, where somebody might be able to get access to the payload, the actual payload exchange between, in our example, the banking app and the bank. And the reason this is becoming more and more common is not only because of the general increase in fraud and social engineering related attacks, where this would not necessarily help us, but because there are still industries that are not as far ahead in the curve like banking when it comes to digital adoption. And the number one is healthcare, right? Healthcare is very heavy in regulation. HIPAA compliance is very quite labor intensive to achieve. And it's a highly fragmented environment, meaning that the different pools of information and data in healthcare, whether it's payee, carrier, provider, it's hyper fragmented, and on top you have the HIPAA requirement. So this is a use case that we see growing quite fast, where in order to be more successful in HIPAA compliance, payload is encrypted. But we also see first use cases in banking where the focus is not only on ensuring the trust, so the claim of identity being trustworthy, but subsequently also that the exchange of information between the individual and the bank then is going in a highly encrypted fashion using zero trust. And with that, I think we have come to the end of this seminar. Here's my email. So if you have additional questions, ideas, whatever it is, please feel free to email me. And thank you very much for joining, and thank you for your attention, and talk soon. Thank you.
Thank you. And with that, we must conclude today's program. The session has been recorded and will be available within 3 to 5 business days. On behalf of the Consumer Bankers Association, thank you to our speakers, and of course, all of our today's participants. Have a good afternoon. You may now disconnect.